If you are planning to buy or sell a condo, pay attention, because a major conventional condo financing change went into effect on August 3rd, and another one is coming on January 4th, 2027. And yes, this could directly affect how easy or difficult it is to finance and potentially sell certain condos. Good afternoon, everyone. Sam here, your real mortgage guy. So what changed? Before August 3rd, certain conventional condo loans could qualify through what was called a limited or streamlined review. In simple language, under qualifying circumstances, the lender didn't have to perform the same detailed financial review for that association required under the full review. As of August 3rd, that option has been retired for new applications. Previously, depending on the transaction and your down payment, you could potentially qualify through that limited or streamlined review. Now, even if you are putting 20, 25% or even more down, doesn't automatically allow you to bypass more detailed condo project review. The lenders may review the association budget, reserves, insurance, special assessment, HOA delinquencies, structural critical repairs, and other project requirements. Think about it this way. You personally may qualify for the mortgage, but the condo project itself may not qualify. Now let's talk about the reserves, because this is where people can get confused. Starting August 3rd, if the reserve study suggesting for that association to have at least X percentage of reserves, lenders gonna review the reserves for that association and want to see that association already implemented and have that suggested X% on reserves. Otherwise, the condo association project may not qualify. Now, what changes on January 4th? That across the board, the association to qualify, lenders want to see 15% reserves for the association. Now, there can still be alternatives, but it's not guaranteed. So this does not mean there is a new federal law requiring that every HOA in America should keep 15% in reserves, and it is very important. We are talking about Fannie Mae and Freddie Mac mortgage qualification requirement. Why does this matter? Because an association could potentially operate legally under applicable state law and its governing documents, but still not satisfy the requirements for particular conventional mortgage. Cash buyers may still purchase. Certain non-QM lenders may also have different condo guidelines and giving you option to purchase with financing. But those programs can have different rates, down payment requirements, and their own project review standards. And here in Florida, this becomes particularly important. Our condo market is already dealing with increased insurance costs, assessment reserve requirements, higher HOA fees, and structural inspection requirements. If a condo project becomes difficult to finance conventionally, the potential pool of buyers for units in that project could become smaller. And from a seller's perspective, a smaller buyer pool can potentially mean longer marketing time and more pressure on the sales price. For buyers using financing, it means you shouldn't only ask, do I qualify? You also need to ask, does this condo project qualify as well? That's why whether you are buying or selling a condo, don't just look at the unit itself. Look at the financial health and financeability of the entire association. Now, all of these changes aren't necessarily bad. Stronger reserves and proper maintenance can help protect the people living in those buildings. We all remember the tragedy in Florida Surfside. Nobody wants to compromise when it comes to structural safety. But there is also no question that tighter conventional financing standards could create another challenge for Florida's already difficult condo market. That's why choosing the right mortgage professional and the right realtor is becoming even more important when you are buying or selling a condo. If you are thinking about buying or selling and want to understand how those changes could affect your specific situation or association, my consultation is free. And remember, before you buy, call Real Mortgage Guy, 541-0041. Thank you.